Hello and welcome to another update video here on Saturday as we head into the weekend for Bitcoin. It will be an interesting video. I want to take a deeper dive into some of these wave patterns which are possible here due to the latest move to the downside. There are a few options which we can now follow, and I can tell you straight away there is at the moment no clear answer. That is also indicated by the probabilities that I gave to the bullish scenario of only 60%, which means I was and I still am leaning slightly towards the bullish scenario. However, the bearish one is of course also possible at the moment, and you get these phases in markets, and many people just don't understand this. You get in possible reversal areas, and we are in a possible reversal area from a very, very long downtrend, which has been lasting over a year. Basically, from an Elliott Wave point of view, you could argue that the bear market started here in April, and that this was only a corrective wave to the upside back in November. Yeah, you know, you can argue that this sell-off has been lasting for a year, and coming down after such a strong downtrend, going into this possible reversal area creates uncertainty. Yeah? And that is good, because in the last 9 months, 10 months, yeah, until we reached the June low, I've been telling you that with a very, very high likelihood we are going down, 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 down. I think this was spot on, and it helped a lot of people. And anybody, of course, who wasn't with us at the time does not understand how well the Elliott Waves were able to forecast these current price levels. Yeah, my target range was always between 20 and 28.6k. And to say that when we are just approaching the 55k mark, that was difficult, I can tell you that. It is as difficult as telling everybody now that there is a realistic chance we go up from here. Yeah, because a lot of people just can't see it. But, and irrespective of if we finally do it or not, there is the possibility. Nobody can go out there and say with absolute certainty that we will go lower. Yeah, people who do this don't know what they're talking about. I'm telling you that, because the possibility exists. The possibility exists, and anybody who's pretending to know what the market is doing is not telling you the truth, because nobody knows. And everybody who's claiming macroeconomics also has no idea, because markets have decoupled so many times from the macroeconomy in the past that it is not a rule that just because we have here a recession coming, or just because of inflation rates, markets have to go down. Of course they can, but first of all, that might not be the reason. Yeah, because market sentiment is the reason, people sentiment. And the other point is that you don't know, because markets have been going up in the past and have rallied in wars, in recessions. Okay, markets are forward looking. Yeah, so markets do not only react to news that, oh, you know, you see it on NBC, we are in a recession, and that an hour later you will see a 20% drop. That's not how it works. Yeah, that is not how it works. So nobody knows at the moment, and therefore I've been talking repeatedly about the current uncertainty in the market, and that anybody who wants comfort and needs that, yeah, sense of security needs to wait until we have a final and a proper impulse created, which hasn't been done yet. Yeah, and I never claimed it had. And a first 3-wave pullback. That is the best indication that you can get that we are in a possible, or that we are in a real uptrend, and we probably get the breakout done. At the moment there is no evidence. There are different wave patterns possible. The wave principle suggests us here different wave counts. And I mentioned it a while ago, I think here in June, that we now have to operate within sight. Yeah, we have to follow the wave patterns, let the waves guide us until we have more clarity about what is actually going to happen here. So at the moment, let's start with the most bullish count, and then we work our way towards less bullish counts. So this is the most bullish one. At the moment, we can still follow that until it gets invalidated, really, or at least until we until we drop below 20.7k. A few days ago, I showed you these 3 levels here of, let's say, warning. The yellow one was broken already. That's sort of the first the first signal that you have to watch, okay, because it means that we have broken below ideal levels for this retracement. The orange one will invalidate this wave 2 pattern, so we need to go to the high level wave count, and the red one will be big warning here below 18.9k that we're also going to retest 17.6, and there's a realistic chance to go even lower than that. And it will mark the transition to the bearish scenario. Here in the bullish one, and that is still very valid, we have created a wave 1, we come down in a 2, we are now in the 3. In this wave 3, you have different subwaves. We have another wave 1 here, and we came down in a 2, and also this wave 3 subwave should have started. In this wave 3, we had a leading diagonal, a wave 1 and a wave 2. And in this scenario, we're basically currently maxing out what we can do. We have pulled back to the ascending trend line of the channel, and we have pulled back to the 20.7k area. We haven't broken it, and therefore this wave count is still valid. As long as we stay above 20.7k, we can follow this wave count and can give Bitcoin the chance, don't know if the bulls will use it, but we can give Bitcoin the chance to reverse to the upside from here. To maintain this wave count, Bitcoin needs an imminent and strong reversal to the upside. How realistic is that? I don't know. It's currently doesn't show any major bullish reaction yet. Because in the very short term here, you can see that we have come down in this ABC pattern in let's call it in a smaller wave pullback in an overall uptrend. That is how you would frame it in this scenario. And it's absolutely possible to see it like that. So we are coming down here in an ABC pattern, and I told you in the last video, after we made this wave 4 high, that there will probably be another leg down, which we saw. We even pulled back to the 21k level here pretty much, or 20.9k, which is the ascending trend line of the so-called bear flag. So as long as we're holding this, there is a chance to go up, but at the moment there is no evidence. So first evidence that this wave 2 low is already in, and that we go up from here in a wave 3, and that would be a wave 3, and it should be bullish, could even take us to around 30k. Then we would need to get above 22,080, or let me would be above that wave 4 high, so above 22.2k. We would need to get above 22.2k, and that would also be here. And by the way, I made a mistake in the last video. The yellow line, oh, it is the 50-day moving average. No, that's all fine then. And it would also go above the 50-day moving average in the same instance. So this is the most bullish scenario. We have to watch this very closely. Could get invalidated easily by dropping below 20.7k, even if it's just a wick. Now, let me show you the next possible bullish scenario. That is the that is the leading diagonal option. And also here we have an update that we can make to the chart, basically, so let me just figure that out here. So, because the leading diagonal, that is one pattern that I've been showing you now for a while. I had it sort of brushed under the carpet, but I think we need to obviously look at it in a little bit more detail here. So, as I said before, here in the leading diagonal, this assumes that from the low at 17.6k we moved up in a leading diagonal. Showed it to you a few times now. In this scenario, we can assume that we've had a wave 1, we had a wave 2, we had a wave 3, we had a wave 4, and we already moved up in a wave 5. So it's not ideal, this scenario. It has its flaws as well. The reason for that is, and I label it how we can make it work now. The reason is that normally in a leading expanding diagonal, as this is, the wave 5, which basically was completed by this C wave here to the upside, in such a leading diagonal, you would have 3 waves also in the impulse waves. So basically also in the wave 5. In this scenario, we should have moved above 26k, because in a leading expanding diagonal, the wave 5 would be longer than the wave 3. Didn't happen. So it's got a bit of a flaw here, this scenario, and therefore I keep it hidden under the carpet a little bit. But this would be the scenario that could be used from a bullish point of view if we invalidate the 20.7k level. It would allow us to justify a stronger pullback in a possible uptrend, okay? Because it would indicate that wave 1 was finished already up here at 25.2k, and that we're now coming down here in this larger wave 2, which could, let me just show you, this could actually drop lower in this scenario. So this scenario would allow us to drop lower. So we could come down to around 20.5k, the 61.8% fib level. Yeah. Even the 78.6, no problem, 19,250, and even 18,500, the 88.7% fib level. And really only when we go below the 88.7% fib level, it will get critical. So this scenario allows for that, okay, very, very clearly. So that's sort of the scenario that the bulls can use in this pattern. I think if we go below 20.7k, we have to pay, pay more attention to this scenario. Then the bearish one. Yeah, the bearish one, we look at the the WXY pattern. I just need to find I don't know which one it is, the one that works best here. It is this WXY pattern. Works similar to the leading expanding diagonal, just that we completed a corrective wave up here at around 25.2k, and that we're now coming down in an impulse, and that would eventually go below 17.6k. And we can also look at it in terms of the longer time frame bearish count, because a few people have asked me, because there's one long-term bearish count that we can make work as well. It's not ideal though. That would assume a longer term wave count, that we have created a wave 1 here back in December 2017. We came down in a wave 2 in end of 18. We moved up in a wave 3. We came down in a 4 here, so that the wave 4 was basically the June low. It's not my preferred count, I have to say that very clearly. And then we moved up in a wave 5 in November. It is possible though. And in this scenario, we came down from the high, which indicates the completion of a cycle of a 5-wave move. Came down in a wave A only. The wave A basically we came down in a WXY pattern, and we're now in the Y wave. In the wave Y, we came down in a wave A. What we've seen here now was just a wave B, and we're now going to come down in a wave C. That would be a very, very bearish count. Slight problem with that count is that in this B wave, we have really only retraced to the 23.6% fib level. That's a bit too weak. Yeah, so I don't really believe this pattern is valid. When it is valid, you can use it. It doesn't invalidate any rules, but ideally in a wave B, you would want to see a move all the way up to maybe the 38.2% fib level, or the 50%, or even the 61.8% fib level. Didn't happen, okay? Therefore, yeah, I'm not a great fan of this scenario here. In any bearish scenario, if we make any additional low, my ideal level would be the region around 14 to 16k. Yeah, I just at the moment can't see it go lower. Also with a relation to the stock market, the S&P 500, the Nasdaq, which are going in corrections as well, where I expect quite shallow retracements. Of course, if those markets are going to do another 1-2 setup as well, for example, that could lead to a great sell-off also in crypto. Not going to deny that. And then we could really see one of these bearish patterns play out. For now, we can still follow the bullish one, and I'm going to follow it as long as we are invalidating it. And the pure reason for that is, at the moment, we're purely following what the market is telling us. We are in a state of uncertainty, and there is, I know nobody likes that, but it's just what it is. In contrast to a state of certainty in which we were from basically middle of November all the way into June, because it was pretty clear we go lower. I've been telling you that in every video. Now we are in a state of uncertainty, and that's not a problem because it mixes things up a bit, and it involves the potential of going higher. But of course, if this potential is going to play out, only the market is going to decide that. Good, and I hope that was an educational video as well. So short term, we can still expect lower prices. This could very much be finished as well, but for this wave 2 to be finished here, we need a signal above the 22.2k area. Yeah, ideally here also above the 50-day moving average, which is at 22,250. Until then, I would remain very, very much focused on the downside. Okay, and that's my update about Bitcoin. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.